Welcome, ladies. Today we are talking about the differences between an FHA versus a conventional loan. So I hope you're ready to battle each other and maybe talk about which one could be better. So we're just going to get started with the down payment requirements. Who would like to go first?
Well, FHA can just do 3.5% down.
I see.
Oh, over here, 3% down on conventional.
That sounds really good.
And you can also sometimes get a grant for the 3% down, so no money down on conventional.
Can we do that for FHA, Becky?
Yes, we can.
And I do have one question. I heard that the 3% down on conventional is only for first-time home buyers. Is that true?
That is not true. You don't have to be a first-time home buyer to get that.
Good deal. Good to know. Anything
But
else?
there's some other requirement, if I remember, to get a 3.5 or a 3% down conventional loan if you're not a first-time home buyer. Isn't there?
Would we like to divulge on some of those details?
So you can put 3% down if you're a first-time home buyer or under the income limits.
Sounds like a good deal to me.
It's the best deal.
I guess.
Okay, moving right along. Let's move on to the credit score requirements. How about that for FHA versus conventional? Becky, do you want to start?
Sure. On FHA, you can go down to 580.
That's pretty low and that's pretty good. What about conventional?
Okay, so we're at 620, but I can also use an average score between the two borrowers.
Ooh, that is a good one because we can't really do that on other loan products.
So if you have a really, really low score and a really, really high score, boop, somewhere in the middle is where we're going to land.
Nice, kind of like that ACT score. It's like a super score, right?
Super score.
Yeah. I like that. How about mortgage insurance? I feel like this works differently for both of these loan products. So do we want to talk about that a little bit?
So every FHA loan has two kinds of mortgage insurance. There is a upfront financed mortgage insurance that is repaid as part of the principal and interest payment. And then there is also the monthly mortgage insurance. So a cool thing about FHA mortgage insurance is that everyone gets charged the same rate regardless of credit score.
That is cool.
That can be really good if you're in the lower credit score range.
Good to know. What about getting rid of that mortgage insurance at some point in time on an FHA loan? How does that look? And how much money do you have to have down to avoid the mortgage insurance on an FHA loan?
So there's no way to avoid mortgage insurance altogether. If you do 3.5% down, you will have that mortgage insurance on there for the life of the loan. If you put at least 10% down, the mortgage insurance is only on there for a mere 11 years.
A mere 11.
No time at all.
None. Good to know. What about you, Miss Conventional?
Okay, so on a conventional loan, the mortgage insurance is based off credit, so it can fluctuate a little bit. But if you have great credit, this is the product for you. Because sometimes we can finance in the mortgage insurance, we can collect it as a cost at closing, so it's not happening monthly. Or we can do the same old monthly mortgage insurance. Now, also something that's different is that when you get this loan paid down to 80%, you can request in writing for the mortgage insurance to be removed.
Let's go.
Let's go.
Let's go. Okay, moving right along to loan limits. We mentioned these earlier on. So what are the loan limits for a conventional loan?
766, 550. Why they don't round, I have no idea.
Kind of weird,
Kinda
but
weird.
whatever.
Yep.
And we want to be super specific that this is a loan limit, not a sales price, correct?
Correct. The sales price would be above that, and whatever the down payment is that you use.
That's important. That's important.
Total purchase price.
It's an even more specific number, and I hope I'm correct when I say it is $498,257.
Wow, we got a smart one over here. Is that we've got some feedback from the audience?
Producers, is that correct?
Producers.
I'm coming up with 498 XXX. Depends on, what's the conventional limit again?
766, 550.
It's 65% of that. 498, 257. Is that what you said?
Wow. Okay, extra points for FHA over here.
Wow.
Love that.
Hair flip.
Hair flip. Next thing is property standards. I think that this is important to talk about because I think that sometimes listing agents are afraid of little old FHA when maybe they shouldn't be, and it's not all that scary. So, but I do think it's important to know like what it is that we're getting into. So, do we just want to like high level talk about what some of the property standards are for an FHA loan versus conventional?
Both products are going to value safety and livability above all else. But things that may appear on an FHA appraisal that may not appear on a conventional would be flaking paint, like a surface that's 36 inches or more above the ground without some sort of guardrail. So we sometimes have to have railings installed for FHA deals. And I'd say the biggest difference is that an FHA appraiser is going to get down in that crawl space and a conventional and an attic. And a conventional appraiser is not required to do that.
Honestly, as they should. I want mine
get
to
in
do
that
that.
space.
I don't want to buy something that's falling apart. But also, all those other things sound like pretty easy fixes, and like that you maybe shouldn't be afraid of them.
That's right. I find a lot of the times when folks are worried about an FHA appraisal, the big ticket items that they're worried about are very much going to show up on a conventional appraisal too.
There you have it.
You know what? And if it does show up, both conventional and FHA has a product for that. We can cure those safety concerns and livability concerns with a renovation loan. Just saying. We both have that
We
product.
both have renovation loans.
Boom. Love to hear it. And then I think that something else important to talk about are the difference in interest rates. Who would have thought that your loan program would maybe dictate a difference in interest rates? So you want to talk about that, conventional?
Well, our interest rates are based off of credit score. So they also, just like the PMI, can vary depending on your credit score. If you're a first-time home buyer, you also get a couple little perks and things like that. But I think our rate is higher than yours right now.
Wah, wah.
It's always higher.
Oh, that hurts.
Okay, but like, by how much? Is it significant enough to where someone would not pick a conventional loan if that was the right fit for them?
I think it has to be a holistic approach because mortgage insurance is part of that payment as well. Once you factor that in, does the reduction in the rate actually become a better deal for you? You just got to look at both and compare them side by side to really know what your options are.
And here's the good news that I have heard about you two is that whenever you are talking to a buyer, you send them both scenarios so that they can see it all laid out and they get to pick which one is right for them at the end of the day. So
Education
it's good. It's what we do.
is what you got to do.
And assumability. How about that? FHA, you want to talk about assumability?
Sure. FHA and VA loans are both assumable, which means that you can just put someone else on this loan for you. So our clients may have seen listings online that say seller has a transferable rate in the 3s. So only an FHA or a VA loan is able to offer that. So
Wait a minute. I have adjustable rate mortgages that offer assumability.
Oh.
You have to be in the adjusting period though, so have fun on that.
Trick shot.
Trick shot.
interesting.
FHA is skeptical. And maybe we've talked about this, and I feel like this is more of a holistic approach to everything that we've mentioned today, but let's high level touch on the purpose of each of these and maybe why someone would pick an FHA over a conventional, just to tie a pretty bow on top of it.
I think we got to talk about how FHA offers the most buying power.
Let's definitely talk about that.
Yeah, FHA will offer, especially a low down payment buyer, especially a low credit score buyer, the most buying power out of almost any product that we have, simply because it allows for the highest debt to income ratio.
That's a big deal. And that doesn't mean that we are approving loans for irresponsible buyers who can't afford these mortgages, but it is, like you said, increasing the affordability for these people who are still working on some things.
And buying power is one of the biggest challenges in this market when rates are high and prices are high. So that is why realtors might be seeing a whole lot more FHA offers than they might have a couple of years ago.
Yeah. And what about conventional?
I think if you're a buyer that has established credit, that has a little bit of money for a down payment, that does have plans on staying in a house for a long time, paying down that principal balance to get that mortgage insurance removed, I mean, I think I'm the product for you.
I think so. It sounds like I would, if I were in that position, I would probably, go with conventional.
Overall, it is a less expensive loan because we don't have the upfront mortgage insurance premiums and things like that, and the requirement to keep it for the 11 years. You have to add all that up, but again, it's not for everybody. That's why we'll look at both.
Not to make a blanket statement, but it does sound like the conventional loan tends to be, not always, and doesn't have to be, for the more maybe experienced homeowner or home buyer.
We do have first-time homebuyer programs now that have a lot more leniency on the credit score, but some of the other factors still need to be there, like a low debt to income and things like that.
Good to know. Well, it sounds to me like you really can't compare the two and make one better than the other. So I think it's all about which one is the best fit for the buyer. And so I'm sorry, we don't really have a winner today, but I do.
We're both winners.
You're both winners.
Good
yeah,
game.
good. I love to see it. Thanks for showing up, ladies. Conventional and FHA. There you have it.